Welcome back. People think about refinancing, buying houses. In fact, we just realized there's a client out there that everybody knows in the whole room, which is pretty funny. Ryan Leopold's back with Cobalt Mortgage. Ryan, people think interest rates are controlled by the government with mortgage. Mm-hmm. It's not really that way. Talk a little bit about interest rates and how they fluctuate on daily, weekly, monthly basis.
Yeah, what's interesting is most people think that the Fed has 100% control on daily interest rates when it comes to our mortgages, and that's just not the case. Interest rates fluctuate daily, just like the stock market. You got to understand what affects interest rates or money's putting into mortgage-backed securities and treasuries. So you look at the fluctuation of money on any given day. You got money going into securities, being stocks. And when people sell securities and they take money out of stocks, they put it into treasuries and bonds, which raises the yields of interest of bonds and get better interest rates. So what you tend to see is when stock market goes down, people take money out of stock and putting it into treasuries, interest rates go up, and the reverse happens. So that's really what controls rates on a daily basis.
I talk about it every day about how bad economic news is actually good for interest rates. You can look back. The bigger the recession, the lower interest rates. It's happened over and over. And as the economy starts to maybe pick back up, interest rates may do the same. It could be that game-changing time to buy a house.
There's going to be a time where rates go up, and the Fed's made it pretty clear they're going to keep rates low until the end of 2014. But low is a relative term. I mean, we're in the high threes, low fours for a 30-year fix today, and historically, 6 to 8% has been really good. So even keeping rates low, does that mean in a year from now we could be at 5.25%, 4.5%, 4.75%? Because that's all still low. So we got to see where rates are going to be and understand how low they are now and where it's been historically, compared to the last 50 years.
Talk a little bit about what it means, though, when rates go up. Because it's not just 1% of a payment. I mean, it's massive.
Yeah, so we do homebuyer seminars quite a bit now, and one of the biggest things we focus on is understanding how interest rates have an impact on people's ability to purchase, okay? So let's talk about numbers for a second. Just for the sake of argument, let's take a $280,000 purchase price associated with a $280,000 loan amount, okay? So let's say just principal and interest at 4.25%, which is give or take where rates are today, okay? Your payment's $1,600, and let's just say that's the level that you feel comfortable with, and that's the max you can qualify for is $1,600 a month. Let's just say instead of rates being at 4.25%, they're at 5.25%. To match that same payment at $1,600, that takes your purchase price or loan amount down to $250, and now we're at 6.25%. That actually lowers that down to $221. So 6.25% is still really good, just not as good as 4.25%. And look how much that really affects your ability to, your purchasability. This house at 280 are going to be a lot better than 221.
I would say there's a pretty big difference, and then as you get even higher, that 500,000 is now 400,000.
Yeah, and what you're finding people is they're getting approved, and the life cycle of buyers seems to be a lot longer than it used to be. You have buyers that are 3 to 7 months out from when they first get pre-approved or talk about the process till the time they're actually in contract. We just don't know where rates could be. Rates at this time last year were 5.25%. And now they're 4.25%, so we just don't know where they're going to be in 6 to 8 months. And with Fed policy, they're still going to be low just based on the little control they do have.
You talk about that the amount of time it takes for somebody gets pre-approved, and especially now, Michael will probably talk about this too, but the amount of time that it takes to actually find the house that you want. And I think that it's an interesting concept, right? I mean, people think they're going to be pre-approved for a certain dollar amount forever. But as you said, rates go up. Guess what? Dollar amount comes down.
Well, here's what's always interesting, and we found this. I mean, I've been in the business for 14 years. I know you've been in the business for, 12 years? 10 years?
Seems like a long time.
What we tend to find is people make reactions on how things are going in the overall economy. So when news is good, you tend to see people going, okay, now I'm okay to go do something major like buy a house. But when news is great and it's all over the headlines that we have appreciation or unemployment's low or whatever, rates are already have gone up. So now you're kind of behind the market a little bit. So I think for buyers today, they just need to understand their current position to see if it is the right time for them to buy and if it's the right decision for them. And if it is, they just need to understand the facts.
And the facts really are, if rates go up, you can't buy the house you want. I mean, that is a fact.
I've got tons of people who are pre-approved out there looking for houses. And again, it's not my job or Michael's job to tell somebody now is the right time to buy. It's to educate them on their options. That way they are ready. But I have a feeling that half of my buyers, if they wait another 3 to 6 months, I'm not saying where rates are going to be. I'm just saying they could be a half point higher, and that affects what they are pre-approved to. And now it just changes their whole spectrum of what they're out there looking for. So it's just important to understand how it works and where we are today compared to where it used to be.
Do you think that people are realistic in what their buying power is going to be forever? Or, I mean, do you think they just think, well, I'm always going to be pre-approved for that? I mean, I think there's a scary piece of this, that people think they just have forever to find the house they want. I know people like this, and actually David Bell is going to be on here in a few minutes, certainly can speak to this. But there's an element of people they wait. They want perfection. And that's a very strange buyer's mentality right now. I want the best house at the lowest rate, and I'm going to wait for it. Well, it doesn't work that way. I mean, rates are the lowest now. I mean, how do you coach people through that?
There's really no way to coach them through it other than I believe an educated and informed buyer is in the market, is ready to take action. And when I see that they're kind of not educated, they don't really have all their answers to the questions they have, they're a little unfamiliar with the process, they just kind of wait on it because of lack of information, a lack of knowledge, and then they get frustrated seeing great houses being sold every single day, and then they get frustrated that the houses they love are getting sold. But they haven't put themselves in a position that says, I am ready when the right property presents itself, I'm going to take action. And I think that comes through information and education. There's
that element of confidence. It comes up all the time, and people are so afraid of not making they're more afraid to make the wrong choice than they are of the opportunity of making the right choice. And that definitely weighs in here. And I think there's a big element of people not even knowing what they're supposed to do. We talked about even shopping for interest rates. People come to your mortgage office, they might not buy it for a year, yet they're already shopping interest rates, which you can't even do. But people don't get it.
Well, that's an interesting misconception is, they're coming in, we're looking to buy in June. We're just curious where your rates and fees are. We're like, well, we're not even close to that because where rates and fees are going to be when it's time to lock in June, it's irrelevant to where they are today. So people quote anything they want today. And you got to work with professionals who are going to sit down, understand where you are, where you want to be, and help you create a roadmap to get from A to B the most efficient way possible. And I think that's what buyers need in the market today is just education, information, and someone who's going to sit down with them and create a plan because everybody's in a unique and different situation. And then you couple that with the toughest lending standards we've ever dealt with, and we have people in more unique situations. We have to put those together and come up with a plan for people.
Well, Ryan, we have to go to break. We're going to bring everybody back right after, but I think you hit on a key point, and we're going to talk about that more, which is finding somebody who can create a specific roadmap for you and what you're trying to accomplish. My name is Ben Brash, and that's Ryan Leopold. You're listening to Brashonomics.